On this channel, our mission is to make life-changing returns by being early-stage investors in revolutionary assets that are in the very beginning of a mega trend. It's working. It happened with small modular reactors. It's happening with uranium mining stocks. Year to date, we're up 40% on the global X uranium ETF. On the more junior side of the uranium mining ecosystem, we have the Sprott Uranium Miners ETF. That's up 13%. The bigger cap assets are outperforming currently because the macro conditions just aren't favorable currently to smaller cap assets. But uranium miners overall are massively outperforming. Small modular reactor stocks are massively outperforming. The Nukes ETF year to date is up 36%, but big cap uranium miners are beating everything. 40% global X uranium ETF, right? So this is massive. This is not the easiest year to make life-changing returns, but it's happening in nuclear technology associated assets. Maybe not all, but patience is literally the only thing required to make life-changing returns. If you understand the fundamentals of a space, you could have panic sold the URA ETF when it hit $20 on April 8, 2025. There was so much negativity on this channel back then when these assets were falling. And of course, whenever everyone gets negative and everyone panic sells, that's when big money comes in, right? So people are generally wrong. If you're emotional about a space, you can't listen to your emotions because your emotions are going to be manipulated by the price action. That's how whales make money. If you had trillions of dollars to invest, you wouldn't be able to buy something because you would move the price too much. So you have to wait for the herd to get all emotional, panic sell. That gives you the ability to start buying. And when the herd gets all emotional and starts chasing pumping charts, that gives you the ability to start selling, right? So do the opposite of your emotions, especially when being an early stage investor. The supply demand tsunami, why uranium is set to explode. Supply is crumbling. Primary production is stuck at 150 million pounds, and the world's largest producer, Kazakhstan, just slashed its 2025 output guidance by 16% due to sulfuric acid shortages and infrastructure delays. The deficit is already forcing utilities to drain inventory. Secondary supplies like military downblending and tails reprocessing, once a lifeline, are drying up, leaving only new mines to plug the gap. And here's the rub. It takes 10 plus years and $1 billion plus to build a mine. So the companies that have exposure to significant amounts of uranium are going to profit massively because there's a multi-decade supply crunch on our hands. That's the thesis. Obviously, the bigger cap ones are doing better because they have more uranium. They have more profits. Then we have this price action from another commodity, copper. From June 16, 2025 to now, jumped from $4.80 to $5.50. That is a massive, massive move. It just hit an all-time high. It just skyrocketed. That's like a 25% move in the underlying commodity. Why did that happen? Because Trump affirms 50% tariff on copper imports will start August 1. So the scarcity skyrocketed, the availability of it decreased. Unbelievable supply-demand fundamentals in the United States. What about uranium? Nuclear fuel. U.S. policy uncertainty hangs over markets. Uncertainty this week over whether the White House's revived threat of higher tariffs on Kazakh and Canadian imports to the U.S. will continue to exclude uranium was yet another sign of the new normal in the nuclear fuel market. Uranium shipments are largely continuing uninterrupted alongside the constant threat of Washington's chaotic trade policies upending nuclear fuel plans. Imports of Kazakh and Canadian nuclear fuel to the U.S. may ultimately continue unabated, but market players are wearily eyeing any number of other threats, from an immediate cutoff of all Russian nuclear fuel imports to a Section 232 investigation to the threat of new tariffs. Here's why it's more difficult to put massive tariffs on uranium, because here is the production of uranium in the United States. It was absolutely nothing. That's when we were covering uranium on this channel, talking about how dirt cheap it was. Now it's starting to pick up in the US, and we know the current presidential administration is doing everything they possibly can to incentivize US production of everything: copper, artificial intelligence, cars, eventually uranium. It's starting. And we've covered on this channel how they view uranium. On April 15, Trump ordered U.S. Commerce to launch a Section 232 investigation into imports of critical minerals, including uranium, with recommendations due by mid-October. Trump's 50% tariff on copper is sending a warning signal for what's coming for uranium. If they could snap their fingers, put a tariff on, and boost uranium production, they would, and they probably will. Once it's possible, without skyrocketing the price, they most likely will. So the trend is favorable, right? Regardless of all of the geopolitics, we're in a multi-decade supply crunch. Stuff like this just accelerates it. We're seeing these assets massively outperform everything else. This is how it works. Get in as dirt cheap as possible when everyone's panic selling, understand the fundamentals, and potentially make life-changing returns.